Fibonacci retracement training video. We'll be using USD SIC Forex pair and the 1 week time frame on the Forex charts. Okay, so first thing we want to do is we want to draw horizontal line to mark our price high. We need to draw 3 price highs. This is because we need to create 3 Fibonacci retracements price ranges. The 3 price ranges will give us an opportunity to determine the first and second confluence zones that we're going to use for our market entry and our stop losses. So in this chart, we are actually looking at a market that is contracting. This market is on a downtrend at the moment. So we select 3 price highs, price high A, and the second price high B. And the criteria that we use to select the market highs are basically we're looking for strong bars. All right, we're looking for strong candle bars. So we're looking for strong candle bars that make high position on this chart, and we want to space out the price high, the gap between the 3 price highs. We want to space them out roughly to an even position. And lastly, we need to create a price low, right, which will mark the current price low. As this in this chart, we're trying to create a Fibonacci retracement to give us an opportunity to make a short trade. As we can see, the market is contracting. We are in a downtrend. So after we've marked our 3 price highs and the price low, we need to select the Fibonacci retracement tool and then draw the first range from price low to price high, as I'm doing currently. All right. So once you've drawn the first range from price low to price high, you want to try and look at your the Fibonacci ratio to make sure and expand them across the charts, right? And then look through to make sure that you have a confluence. So we have market has actually respected at least one of those ratios in the past. Okay, so if market has respected one of those ratios in the past, it means your price range or your fib range from low to high is actually correct. Okay, so I will draw a second Fibonacci range, again from price low, the same price low, now to a different price high B. Again, we want to extend this across the old charts to see if market has respected any of those Fibonacci ratio again in the past. So we can see some indication here that one of those Fibonacci ratio on our second price range was actually respected in the past. So which means this price range that we've just drawn is actually accurate and is going to give us the confluence zones that we're looking for. Okay, Yep, there you can see that market respected the 61% range. So now we draw a third range across the chart. Now from price low, same price low as before, to a price high C. You want to again look for an indication that at least one of those three Fibonacci ratios uh, have been respected in the past by the market. Here I can see here that we do have an indication that the market respected one of those ratios in the past. So at the moment we're using the most significant three Fibonacci ratio, which is the 61%, the 50%, and the 38%. Right, these are the three most significant Fib ratio that the market responds to. Okay, so if you from your Fibonacci retracement chart, you may want to customize it so that you remove the other ratios, i.e. the 75%. You don't need that. The 100% you don't need. You need to take them out and just leave these three Fib ratios, right? So as not to confuse your chart drawing. Yeah, you want to keep it clean with the three important ratios that you're looking at here: the 38%, the 50%, and the 61%. Right. We have seen a confluence. Right. We've seen a confluence. The first confluence is where my line is currently, and we have also a second confluence right over there. Right. So a confluence is where two Fibonacci ratio are aligned, where two Fibonacci ratio are in perfect alignment or near perfect alignment. That's what you call a Fibonacci confluence zone, right? So the confluence zone is what we're looking for. To the first confluence zone in this example over there is where we will take our market entry, sell entry in this case, all right? So this is our confluence zone A, and this will be our sell market entry point. Right. Again, the confluence zone is where two Fibonacci ratio are in perfect or near perfect alignment. Okay, so we found that here in with the 50% and the 61% intersected, right? Right over there. Yeah, we have an alignment of the 50% and the 61%. Yep, that's right over there. We have the alignment, as you can see. So this is where we place our market entry, right, to sell. So we have a second Fibonacci confluence zone B, just above the confluence zone A, where again we have a perfect alignment of two Fibonacci ratios. Again, we have 61 and 50% in alignment, so we call that confluence zone B. And we'll place our stop loss just a little bit above this zone, right? The market price on this, above this zone. Perfect. Yeah, that's another alignment over there. And this is just a little bit above here. We place our stop loss. Okay, there is now. We've set up the Fib retracement. We said three Fib ranges, right? Fibonacci retracement ranges. We set 3 Fibonacci retracement ranges, and we draw a line, a Fibonacci retracement from the same price low, right, to 3 different price highs, price A, B, and C. And by doing so, we managed to get 2 Fibonacci confluence zones, right? Zone A and B. The confluence zone is an indication that market is going to respect that price level very strongly, because we have 2 Fibonacci's, right? 2 powerful Fibonacci ratio in alignment, right? That's an indication that market will respect this market entry, right? This is where the market in right now we are in a downward trend. So the market, when it does retraces back up, is going to find resistance at confluence zone A, right? So it's going to find an incredibly strong resistance at a little bit lower down at confluence zone A, right there. So the market is expected to retrace up to that level and then bounces back down, right, past the previous low, and this will be your profit level areas, right? In part 2 of this video, I'm going to walk you through how we actually use Fibonacci to map out the profit levels as well. Okay, I'm just making like a rough guess right now with this Elliott wave tool that I've just used, but we will get to the point in part B of this video, so stay tuned, and I'll be showing you exactly how I've used Fibonacci retracement to project for profit level taking as well. Okay, so there you are. We've got a nice Fibonacci retracement tool that we have now used to compute our market entry point as well as our stop loss placement. See, that's where we place our stop loss. What you can also do is you can actually wait until market retraces back to the confluence zone A. Once the market retraces back to the confluence zone A, you can actually look at the 1-day time frame and look what the oscillators are doing at that point, right? So you can see what the 1-day time frame oscillators are doing, and once they start to reverse back down, right, that is an indication that the confluence zone will be respected, and you can immediately place your market entry at that point. Okay, so guys, this is the proper way, or the correct way, to actually utilize Fibonacci retracement tool to set up your trade for entry and stop loss. Okay, and you can use the reverse of this exactly when the market is going long for a long trade. This particular setup is for a short trade, and just do a reverse of what I've just shown you here to do the same thing for a long trade. Okay.